Hello, everyone. Thank you for joining today's webinar, SAS 136 Changes to Your Annual Employee Benefit Plan Audit. Today's program will be presented by Sheri Wronko, partner in Withum's Employee Benefit Plan Services Group, and Ana Romeo, manager and team member of Withum's Employee Benefit Plan Services Group. Before we begin, I have a few notes. At the bottom of the toolbar on the right of your screen, you'll see a questions box. Feel free to send us your questions during the presentation. We will do our best to address them at the end. There will be 4 polling questions throughout the program. To qualify for CPA credit, you must participate in each poll. CPA certificates will be emailed to you within a few weeks. And finally, once the webinar is over, there will be a pop-up asking you to complete a survey of today's webinar. Please take a moment to complete it. It is our way of being able to provide you with the best and most relevant programs possible. And with that, I will turn it over to Sheri and Ana.
All right, thank you, Jen. So as she said, I am Ana Romeo. I'm an audit manager at Withum Smith & Brown, and I've been in the employee benefit plan space for 8 years now. And Sheri?
Hi, everyone. I'm Sheri Wronko. I'm a partner in our Employee Benefit Plan Services Group based out of the East Brunswick office, and I've been with Withum doing employee benefit plans for 20 years.
All right, so with that, we will get started. So today's learning objectives is to understand the history of SAS 136. We also want you to walk away with knowing the key changes that are within this new SAS 136, and also the new performance requirements for the audit of the financial statements. So a bit of history on where this came from. In 2015, the DOL's Employee Benefits Security Administration published a study that examined the quality of audit work performed on the employee benefit plans by independent qualified public accountants. That study found that 39% of the employee benefit plans had one or more major deficiencies with respect to one or more relevant GAS requirements, and that would lead to a rejection of the Form 5500 filing. Also, close to 60% of the limited scope audits studied were found to contain audit deficiencies. So as a result of this, there was an acknowledged need to strengthen the quality of employee benefit plan audits and to enhance auditor reporting. So the AICPA's response to this was the new accounting standard SAS 136. So in July 2019, the AICPA Auditing Standards Board issued as a final standard the Statement on Auditing Standards, or SAS, number 136. And this prescribes certain new performance requirements and changes to the form and content of the related auditor's report. SAS 136 is effective for plan audits for periods ending on or after December 15th, 2021. And it applies to audits of single employer, multiple employer, and multi-employer plans subject to ERISA. And this should not be adopted for any plans that are not subject to ERISA. And just from a technical aspect, the SAS 136 has been codified in the new AUC Section 703 of the AICPA Professional Standards. And this standard is the foundational section that addresses the auditor's responsibility to form an opinion on the ERISA planned financial statements. And it also prescribes the form and content of the auditor's report for the ERISA plan audit. And then with that, we will go to polling question number 1.
Polling question number 1. What is the main goal or goals of SAS 136? We'll give you all a moment to answer. Looks like 88% of you all said all of the above.
And 80% would be correct. Okay, so moving forward, this is a summary of the key changes as part of SAS 136. So there were some changes to the terminology that's being used, which I'm still trying to get used to. The requirements for the plan auditors changed. There were also some changes to engagement acceptance and management's acknowledgements as part of the acceptance of the engagement. We will also, as auditors, need a substantially complete Form 5500 prior to dating the auditor's report. The auditor's report itself also has changed. There will be some additional management representations that will need to be made and will be included in the representation letter at the end of the engagement. And also the auditor's communications, including reportable findings. There were just some changes to the requirements as far as communicating those to plan management. So with the terminology, so the old limited scope audit is now being referred to as ERISA Section 103A3C audit. Yes, I know that is a mouthful. And the full scope audit is now referred to as, and we're very creative, the ERISA non-section 103A3C audit. So those are the two new terminologies being used for the prior limited scope and full scope audits. And just by way of background, the reference is coming from the specific section in the ERISA regulations. And as you know, with limited scope audits, the ERISA Section 103A3C, it's the same thing. It permits plan management to elect to exclude from the audit certain investment information that a qualified institution holds and certifies as complete and accurate. We do not need to perform specific auditing procedures over that information if properly certified. So the requirements for the plan auditors have been expanded in all phases of the audit, and this includes engagement acceptance, obtaining additional management representations, performing risk assessment procedures related to the plan instrument, plan tax status, and prohibited transactions, and formalizing procedures to responding to the identified risks. As I mentioned before, there is a new form of the auditor's report, as well as communicating additional matters and reportable findings to those charged with plan governance. And we will be going through these requirements more from a plan sponsor perspective, so you know what to expect from your plan auditors for the audits coming up. So as part of engagement acceptance, management will be asked to acknowledge a few more items. So if you are reviewing engagement letters, these are things that you should be on the lookout for as far as new items or expanded items that you'll be asked to acknowledge through the engagement letter. So one of those items is maintaining a current plan instrument, including all plan amendments. Management should acknowledge administering the plan and determining that the plan's transactions that are presented and disclosed in the financial statements are in conformity with the plan's provisions. This also includes maintaining sufficient records with respect to each of the participants to determine the benefits due to them or which may become due to such participants. As I mentioned before, we will need a substantially complete, we as auditors will need a substantially complete draft Form 5500 that will be included in the engagement letter as an acknowledgement. And also, when management elects to have an ERISA Section 103A3C audit, previously limited scope, management is responsible for determining whether an ERISA Section 103A3C audit is permissible under the circumstances, that the investment information is prepared and certified by a qualified institution as described in the CFR, that the certification meets the requirements of the applicable CFR, and that the certified investment information is appropriately measured, presented, and disclosed in accordance with the applicable financial reporting framework. So just to expand on that last point regarding management acknowledging that the audit would be permissible under ERISA Section 103 A3C audit, under SAS 136, management must provide the auditor with their assessment and determination that the entity preparing and certifying the investment information is indeed a qualified institution and that the certification satisfies the ERISA requirements, allowing for the ERISA Section 103 A3C audit. And this acknowledgement is required during client acceptance. So you should expect to have this conversation very early on in the process with your auditors. And then with that, I'm going to hand it over to Sheri, who is going to go into more detail about how management can make that assessment.
Hi, everyone. Okay, so this is something that you're going to see new this year, because previously the assessment on the limited scope certification, again, sorry, old habits die hard, a Section 103 A3C audit, was typically done by your auditor. You know, the certification was received as part of the audit, and the steps that management now has to do and document are items that your auditor would have already gone through. But now with SAS 136, it is required that management do that assessment on their own. So with the certification that you receive, you know, how do you make that determination? Well, the things to consider are, step one, is the investment information prepared and certified by a qualified institution? So what exactly does that mean? Who is a qualified institution? That can be a bank, an insurance company, a trust company, and can also sometimes be an agent. There are some agent relationships where an agent is certifying on behalf of either a bank, insurance company, or trust company. Now, I just want to mention here, there are various tools out there to help you with this assessment. If you're a Witham client, we have a template that we will provide as part of our audit that goes through these various steps. There is also an AICPA toolkit that includes this assessment. So there's various stuff out there to help you with making this assessment. So step two is the certification signed by an authorized representative? So here what you're going to look for is an explicit statement of authority to represent the certifying institution. And we're going to go through this in a little more detail. I have a couple examples to show you. Next slide, Anna. Step three is, did the qualified institution certify to both the accuracy and completeness of the investment information? You'll see that accuracy and completeness here is in italics. Those are two important words that you're going to look for on your certifications. Next, does the certification or the related reporting package include language that qualifies or calls into question whether the investment information is accurate and complete? So here what you're looking for is, are all the assets covered by the certification? Sometimes there can be reasons why some assets aren't included. So you're looking for qualified language that breaks out certain assets, and ideally you would want the certification to cover all of the plan assets. And lastly, are the investments certified by a qualified institution properly valued as of the date of the plan's financial statement? So what you're looking for here is, does the certification date match the plan's financial statement date? And are the investments properly valued? So there are various ways you can go about this. You may have internal resources that could help you to evaluate whether the plan assets are appropriately valued. It also depends on, you know, what type of investments are in your plan. Obviously, if you have level 2 or level 3 investments, those are going to be a little different to value to evaluate versus your readily marketable securities. But overall, whatever process you go through, you want to document it as part of this management assessment. Next slide, Anna. Okay, so here's an example of a certification. This one happens to be from a census. First of all, what's important is that you have the name of the plan. There are some certifications now that don't come with the name of the plan on them. So if that is the scenario for you, you want to reach out to your representative and see if they can give you something that either has the plan name or they can verify that this was issued to your specific plan. You have the plan period, which is important. You want to make sure that it covers your entire audit period. And then here, in the items here boxed off in red, obviously you have the name of the trust company, a census trust company. So again, that first question on management assessment was, what type of entity is certifying? In this case, it would be a trust company. And then you have the next highlighted item is a census hereby certifies that the statement attached hereto, furnished pursuant to 29 CFR, blah, blah, blah. That is very important language. This 29 CFR language here is the code that allows a limited scope or section 103A3C audit to be issued. So you always want to look for this codification numbering here, as well as is it complete and accurate. And then lastly, you're looking for an authorized signature. Who was authorized to sign this certification. And here's another example from Fidelity. So again, you've got the plan year end, you've got the name of the plan, and then this sentence here that it certifies that the information in the reports provided is complete and accurate. Again, those are your buzzwords that you're looking for. And that the statement is being furnished pursuant to the codification, which allows for a section 103A3C audit. And again, you're looking for an authorized signature on here. Some certifications do come with a list of the plan's investment holdings. That is a good way for you also to identify that all of your plan assets are covered by the certification. Typical things that we've also seen in the past is, sometimes notes receivable from participants are or are not included in the certification. That's something you want to document. And if there are any assets held outside of this certifying entity, but still within the confines of the plan, again, you want to address those types of things.
And Sheri, just to jump in very quickly, I think where I've also seen some hang up with whether or not the certification covers all assets is if you have alternative investments. So if your plan has interest in partnerships or hedge funds, private equity funds, sometimes that information is coming from those investment managers and is being reported within the trust statement. But I have seen sometimes where the custodian has a caveat that they're not certifying that information because it's coming from an outside party. So if you have alternative investments, that might just be a good question to clarify with your custodian, is just to confirm whether or not this certification covers those.
Great points, Anna. Thank you. So next is the requirements for plan auditors. So it is the auditor's responsibility to then take management's assessment and review it and see that it is permissible and qualifies as a section 103A3C audit. We're going to identify that the investment information is certified and perform the following procedures on the certified investment information, which is, again, to obtain from management and read the certification, compare that certified investment information with the related information presented and disclosed in the financial statements, and to read the disclosures related to the certified investment information and assess whether they're in accordance with the presentation and disclosure requirements of the financial reporting framework. So we're also going to perform audit procedures on the financial statement information, including disclosures, which may not be covered by the certification, as well as any non-investment related information based on our risk assessment of our material misstatement. Next slide, Anna. Now, SAS 136 also has discussions about risk assessment, specifically to the plan instrument. So the plan document and effective amendments are essential to understanding the plan and identifying and performing audit procedures and making sure that those audit procedures are responsive to those assessed risks. So where management may see some changes in the current year is since we need to make those assessments early on in our audit process, what would be helpful is for management to present any changes, whether it be changes in the plan document, changes in HR procedures, changes in payroll procedures, any of those items that will go into what the auditor would need to assess in terms of this year's risk assessment. And next is our risk assessment with regards to the plan's tax status. So the auditor needs to consider whether management has performed the relevant Internal Revenue Code compliance tests, which includes discrimination testing, the results of those testing, and if the plan has corrected any failures as a result of those tests. So because if the plan is not in compliance, then that can affect the plan's tax status. And obviously you want to maintain that tax exempt status for the plan. So we're going to determine if the plan is operating within the specific guidelines established by the plan instrument in accordance with the Internal Revenue Code, and management is responsible for conducting certain non-discrimination testing to make sure the plan remains compliant and maintains its tax exempt status. So we're going to, as always, obtain that discrimination testing, evaluate that all those corrections have been properly made, which could include obtaining proof that the corrections have been made and that all the appropriate tests, compliance tests have been performed for the current audit period. Included in risk assessment is also evaluating any prohibited transactions related to the plan. So the auditor needs to evaluate whether any prohibited transactions have been identified by management or have come up as a result of audit procedures, as they would need to be reported in the supplemental schedules. So under section 406 and 407 of ERISA, reporting any parties in interest is required, as well as any delinquent participant contributions. I'm sure many of you are more familiar with the delinquent participant contribution section, as that is the more common area that we see. But if there are any delinquent participant contributions, as always, they are required to be reported in the supplemental schedules of Schedule H. There's also some disclosures that go along with it. Any prohibited transactions are required to be reported on the supplemental schedules of non-exempt transactions. And now we're up to polling question number 2.
Here's our second polling question. Post SAS 136 limited scope audits are now referred to as what type of audit? Limited scope audit, ERISA section 103A3C audit, SAS 136 audit, or EBP audit? And we'll give you a moment to submit your response. We'll close the polling question in a moment. It looks like the majority answered ERISA Section 103A3C.
That would be correct.
Great job, everybody.
Okay, so moving forward, we had mentioned before that a substantially complete draft Form 5500 will be required to be provided to the auditor before the auditor can date the report. So substantially complete, what does that mean? So a draft Form 5500 that's substantially complete means that it includes the forms and schedules that could have a material effect, whether qualitative or quantitatively, on the information in the financial statements and the ERISA required supplemental schedules. So if you think about the Form 5500 and the main area for financial information is Schedule H, there's also compliance questions that are answered there. But if your plan has insurance contracts, then you would need to provide Schedule A for insurance contracts. That would be considered as one of the required schedules. Schedule C for expenses, Schedule D for any DFEs. So just make sure that all the schedules that should be filled out within the Form 5500 are substantially complete when you provide it to the auditor. And then the auditor will compare the information within the draft Form 5500 to the information within the financial statements and communicate any material inconsistencies or any material misstatements to management. So what do those two key terms mean, material inconsistencies and material misstatements? So a material inconsistency would be where the information in the Form 5500 conflicts with the information that is within the planned financial statement. So this could be where perhaps there's a contribution receivable that needs to get booked on your Form 5500 and it's being reported on your ERISA financial statements. A material misstatement of fact would be where there is information that is omitted in the Form 5500 that's unrelated to matters appearing in the audited ERISA planned financial statements. So this could be perhaps your fidelity bond, where you need to report the fidelity bond coverage in Schedule H. There are various compliance questions regarding, as Sheri mentioned before, prohibited transactions. So those would be some examples of areas you would look at as far as whether or not there is a material misstatement of fact. And then here we have an example of where the accountant's opinion will be on Schedule H. So with the prior year Form 5500, you probably already saw that the accountant's opinion section changed pretty significantly from prior years. And that was because originally SAS 136 was targeted for the 2020 audits. However, with COVID, it was delayed. So this change did happen to the form last year. Most likely, you will not need to change too much here, but as a refresher, where the accountant's opinion is, we no longer disclaim opinions with SAS 136. So there will be the unmodified opinion if it's a clean audit. And then down in Section 3B, you have three different options for what you can check off as far as what the audit was done pursuant to. So the first box will be used for if the ERISA audit was done under ERISA Section 103A3C. Box number 2 is related to certification from one of 312 investment entities. This is more on the rarer side, so you probably won't see that as often. And the last box is if your audit was done under non-Section 103A3C audit. So that would previously be a full scope audit. That's where you would check off that box number 3. And then we move to polling question number 3.
Polling question number 3, who is responsible for determining that the plan's transactions disclosed in the financial statement are in accordance with the plan instrument? Is it plan management, third-party administrator, auditor, or all of the above? And please submit your answer. We'll leave it open for a moment.
And I do see that we have some questions coming into the chat, so thank you for that. We're going to leave some time near the end of the presentation to go through questions. And then certainly if we run out of time, we will make sure to reach out after the presentation to get you a response.
All right, we'll be closing the poll in a moment. All right, so it looks like we had a split answers here.
So ultimately, it is plan management's responsibility. So the correct answer would be A. Okay, so Sheri is going to now go into the auditor's report and how that's changed.
Okay, so you'll notice that the auditor's report under SAS 36 does look significantly different with the implementation of SAS 136. One of the objectives of SAS 136 was to provide a better understanding of the scope of the audit and just overall more transparency with the opinion. So it does make it more clear about the responsibilities of the plan sponsor and the auditor. So, as Anna had mentioned, it is also no longer a disclaimer of opinion. The SAS Section 103A3C audit now does actually give an opinion on the audited financial statement. So it will include information on the procedures performed on both the certified and non-certified information, as well as on a new basis for opinion section. And like we said, it's intended to be more transparent. So you have your Section 103A3C audit, which was your limited scope, and your non-103A3C, which is full scope, the old full scope. You can go ahead, Anna. Okay. So like I said, it is no longer considered a disclaimer of opinion. We now issue an opinion, and our opinion consists of two parts. First is an opinion on the fair presentation of the information in the financial statements not covered by the certification. And the second part is an opinion on whether the investment information in the financial statement reconciles with information in the certification. So in your presentation materials, we've included an example SAS 136 audit report under Section 103A3C. I'm not going to bring that up right now, but you have that as a resource to refer to as you like. So here we have a comparison of what was the auditor's opinion and the overall layout of the auditor's opinion in the various paragraphs under the limited scope versus now the new Section 103A3C opinion. So not only have the titles of all the different paragraphs changed, but they're also in different order. So under the limited scope audit, you can see that item number 5 was our actual disclaimer of opinion. Now under Section 103A3C, the opinion is now number 2. So it's moved up and everything has been reordered, as well as obviously a lot of new language included in the new auditor's opinion. You can move to the next slide. So since the wording is different, the options for reporting as well are different. So the financial statements need to be comparative. So if we're talking about a 12/31 year end, you're comparing, your financial statements include comparative information on December 31st, 2021 and 2020, except that those are done under two different standards. So you have two different options when it comes to the audit opinion. One is to include two separate audit opinions, one being a section 103A3C opinion, and then the second opinion being the old limited scope opinion, which is what would have been included in your financial statements last year. Or option number two is to issue one report, which refers to the current year audit as a section 103A3C audit, but then an other matter paragraph referring to the prior year as being a limited scope. Witham has taken the option 2 approach, so that's what you'll see if you happen to be a client, but they just wanted to make everyone aware that there are two different opinion options out there. So talking a little bit more about the opinion. So let's just go through a little bit so first it's going to identify the plan whose financial statements have been audited. It's also going to state if the auditor performed a section 103A3C audit. You're going to identify the title of each statement in the financial statements. There's a reference to notes. You've got the specific dates or periods covered by the financial statements. There's also a statement that management has determined that a section 103A3C audit is permissible, as well as a statement that as permitted by section 103A3C, the audit need not extend to any statements or information related to assets or investments of the plan by a bank or similar institution. And lastly, state that management has obtained the certifications from a qualified institution and for the year ended that the information is certified. So as you can see, there's a lot more to it than was previously included in the opinion. Next slide, Anna. So moving on, the auditor's report will include an actual opinion section, and that is called the scope and nature of ERISA section 103A3C audit within the heading of opinion. When the auditor has not identified any material misstatements and no scope limit exists, the auditor's report should include a statement in the auditor's opinion based on the audit and on the procedures performed as described in the auditor's responsibilities for the audit of the financial statements section. So I'm not going to go through all of this, but as you can see, plenty of changes here. The auditor's opinion will identify the applicable financial reporting framework as well. So the auditor should express an unmodified opinion when we conclude that everything is fairly presented on all material respects in accordance with the applicable financial statement framework. When auditing ERISA plan financial statements, the auditor is also required to report on any supplemental schedules. So you'll see a paragraph there, as always, including an opinion on the supplemental schedules. And then there could be other sections of the auditor's report based on other circumstances. So for example, if you have a different auditor in the prior year, you'll have a separate paragraph referencing the prior auditor's report and what their opinion or disclaimer may have been. So there could be additional paragraphs added for certain other situations. And then, of course, there are still the modifications to the opinion. So under section 705, you still have the options of a qualified opinion, an adverse opinion, or a disclaimer of opinion. It's just that, that disclaimer of opinion would no longer be related to a limited scope audit. So in the basis for opinion section, the auditor's report will include a section directly following the opinion section, which has a header of the basis of opinion. And that's going to state that the audit was conducted in accordance with generally accepted auditing standards. It's going to refer to the section of the auditor's report that describes the auditor's responsibilities under GAS. It's going to include a statement that the auditor is required to be independent of the plan and to meet other ethical responsibilities in accordance with the relevant ethical requirements related to the audit. And it's also going to state whether the auditor believes that the audit evidence that the auditor has obtained is sufficient and appropriate to provide a basis for the ERISA Section 103A3C audit opinion. I will eventually get used to saying 103A3C without sounding like a robot. Just doesn't roll off the tongue. I'm not sure who decided to go with that. Next is our responsibilities for management. So there's a whole section in the auditor's report which describes management's responsibility. Obviously, this is new, as prior auditors' reports did not go into this level of detail and did not have this management responsibility section. So the opinion will include these different statements here. As you see, I won't read through all of them. You can read them on your own, but you know, it does state that management has gone through this assessment and has elected the 103A3C audit. And then the auditor's responsibilities for the audit of the 2021 financial statements. There is an expanded description of the auditor's responsibilities, including the auditor's responsibilities related to the professional judgment and professional skepticism, and the auditor's communications with those charged with governance. In addition, this section explains that the ERISA Section 103A3C audit did not extend to the certified investment information, except certain procedures that are outlined in this section of the auditor's report. So again, this all speaks to, you know, additional transparency with regards to the audit opinion and more description of what is involved in the audit. And then in the other matters section, there's two main matters to be reported on. One is the 2021 supplemental schedules. So any supplemental schedules attached to the financial statements are included here in this other matters section. So that would include your Schedule H. It would also include supplemental schedules related to, you know, delinquent participant contributions or any non-exempt transactions if there happen to be any. I'm sorry, prohibited transactions if there happen to be any. And then there's also an other matters paragraph related to the auditor's report on the 2020 financial statements. So again, I mentioned this before, that there's two options for how you report on the 2020 financial statements. Witham has taken the approach to include this all in one opinion, and so our reference to the 2020 financial statements would be in an other matters paragraph that would reference that the prior year was a limited scope audit as opposed to the current year's Section 103A3C audit. And then talking about full scope audits, which is now known as a non-Section 103A3C audit, you can see the similar changes to the opinion as on the 103A3C audit. So again, the paragraphs the headers are different, things have been shifted around. So even, you know, I know a lot of this presentation, we're talking about Section 103A3C audits, but SAS 103, SAS 136 still does change the auditor's opinion for a full scope audit and readjust the paragraphs and wording here as well. So when a continuing auditor performed a full scope audit and comparative ERISA financial statements for the prior year and a non-Section 103C audit in the current year, the continuing auditor updates their prior year report in accordance with section paragraph 0.86 of AUC section 703. So this would result in issuing one report that refers to each period for which the financial statements are presented and on which the auditor is expressing an opinion, for example, for the years ended December 31st, 2021 and 2020. And again, in the attachments, we have an example of your non-section 103A3C audit opinion and what that will look like under SAS 136. And you know what, if I could just jump in here before Anna takes over this slide. It wasn't included in some of our slides here, but there is some additional paragraphs also talking about going concern and other matters. So again, just, you know, you're going to want to look through your audit opinion this year, just understand everything that's included, because it does look a lot different than in prior years. And Anna, I will turn this over to you.
Thank you. Okay, so now we're going to talk about the written representations at the end of the engagement. So this will be, this is talking about the management representation letter that you sign, you get it back to the auditor to release the audit report. So in that representation letter, there are a few things that you should expect to see this year. The first bullet point there, we will be asking that management acknowledges and represents they've provided the auditor with the most current plan instrument for the audit period, including all plan amendments, acknowledgement of management's responsibility for administrating the plan and determining that the plan's transactions that are presented and disclosed in the financial statements are in conformity with the plan's provisions, including maintaining sufficient records. It's very similar to what's in the engagement letter. Whereas versus that's an acknowledgement at the beginning, this is the representation at the end. Also, you will see that when management elects to have an ERISA section 103A3C audit, that there is the acknowledgement and representation that management's election of the ERISA section 103A3C audit does not affect its responsibility for the financial statements, and determining whether the ERISA section 103A3C audit is permissible, the investment information is prepared and certified by a qualified institution. It's very similar to what we had spoken about before regarding management's acknowledgements. And with that, we'll go to polling question number 4.
Our final polling question for today's webinar: what type of audit are you anticipating for your plan? Is it an ERISA section 103A3C or ERISA non-section 103A3C? We will give this a minute for everyone to submit their responses.
And this question is certainly subjective. There's no right or wrong. We're just curious what the pool is for the people who are on the seminar. I feel like the answer is going to be more ERISA section 103A3C versus non-section.
I agree, Anna. Those do seem to be the most common.
Yeah.
We'll be closing the poll in a couple seconds. All right, looks like you were right.
Okay. I can't see the results, but I'm curious what the split was. Do you have that?
Oh, it
Jen?
was 65% limited scope, or section 103A3C.
Okay, that's a lot closer than I thought it would be, though.
I know. I thought it would be higher.
Yeah. All right, so moving forward to the last section, and then we're going to go into the questions. So when it comes to reportable findings, SAS 136 requires that auditors, when they're designing and performing the audit procedures, that they need to consider the relevant plan provisions that would affect the risk of material misstatement within the plan. So this would mean whether eligibility and contribution provisions are being administered in according with the plan document. Eligible compensation, I know, is a very big area. And the auditors will be required to communicate in writing to those charged with plan governance on a timely basis any reportable findings resulting from those procedures. So reportable findings are matters that are one or more of the following. So it could be an identified instance of non-compliance or suspected non-compliance with laws and regulations, finding arising from the audit that is within the auditor's professional judgment, significant and relevant to those charged with governance regarding their responsibility to oversee the financial reporting process, and an indication of any deficiencies in internal control that were identified during the audit, and those that have not been communicated to management by other parties, and that they're significant enough and of sufficient importance to merit management's attention. So what does this mean? It means that management should expect to receive a written communication of any reportable findings that would include the description of the reportable finding, sufficient information to enable those charged with governance and plan management to understand the context of the communication, as well as an explanation of the potential effects of the reportable findings on the financial statements or to the plan. And the caveat here with the reportable finding is that the auditor is not permitted to issue a written communication stating that no reportable findings were identified during the audit. So unfortunately, we can't give that. And on this slide here, these are just some more resources to take a look regarding SAS 136, the implementation, as well as some WITHM articles that have been put out. So with that, we will go to questions. So let me pull up the question box here. So one question that I saw a lot, Sheri, was if there are some assets not covered by the certification, do you still have 103A3C audit on the covered assets?
So that's a great question. So if management is going through and doing that assessment, and you have assets that aren't covered by the certification, number one, you want to identify that on as part of your assessment, what is and what is not covered by the certification. And then it really goes to an evaluation by the auditor in terms of whether you can still issue a limited scope, section 103A3C audit or not. It depends on the materiality of those assets that are not covered by the certification. So it's really a case-by-case basis. I can't give you a definitive answer, but you just, as management is going through, you definitely want to make that distinction in terms of what's covered and what's not.
And there was another question that I believe that also addresses. So that question was, in those instances where alternative investments exist and are not covered by the certification, what implications does that have for plan management and the auditor? And I think Sheri's answer speaks to that as well.
Yeah, ultimately, obviously, if the assets aren't covered by the certification, then the procedure would be to perform additional steps, additional audit procedures on what's not covered by the certification, and then make an assessment of whether, what is the appropriate audited opinion then. Is it a section 103A3C or a non-section 103A3C?
Okay, so another question that we have is, do you know how long does it typically take a CPA to implement all these new changes?
I think it really depends on what your procedures were before versus now. I mean, I can say for Witham, we were doing a lot of what is included in SAS 136 already. There certainly is some additional documentation. So I think you'd want to at least include 2 or 3 hours maybe in your planning elements to incorporate the SAS 136 elements. So it's hard to say, but there definitely is some additional time to implement SAS 136.
Okay, and then another question that came in is, do you have an example memo to document management's assessment aside from the AICPA tool, the questionnaires?
We do. We have something we've internally created, which is what we are providing to our clients to help them with this assessment. It is based off the AICPA tool that's out there, so it really isn't all that different. But well, I'm not. I guess we can figure out how to get that to you at the end of the seminar.
Okay, and then this question is, if we had a previous multi-year engagement letter, should we expect a new engagement letter?
Yes, I believe so, because there are some, with SAS 136, there are additional representations that didn't exist before. So there has been changes to the engagement letter and the rep letter. So you'll see changes to both of those for SAS 136 in the current year.
Okay, and then one more question. I believe this is the last one, but I will double check. If we have a church plan audit and using PPC forms for the audit documentation, will we see any changes this year due to the new standard implementation? This is probably more from the auditor side, and I have to be honest, I don't do church plan audits, so I might need to look into that and get back to that individual.
Yeah, we also don't use PPC forms, so will we see any changes? I mean, I would assume you'd see some changes because, like I said, SAS 136 is documentation heavy. But yeah, we'll have to get back to you on that one for more further detail.
Okay, I'm just going through to see if there's any other questions. And we have about 2 minutes left. So if anyone has any other questions, please feel free to put them in the chat and we'll try to get to them. Okay, we have one more question. If the auditor prepares the 5500 as part of the audit, how is your process changing based on SAS 136?
Well, I mean, go ahead, Anna.
I was going to say that, so preparation of the Form 5500 when we're also doing the audit is a non-attest service that we would provide. So I know, speaking for Witham, our audit teams work closely with the tax teams to get them as much information as possible and ensure that we do have a 5500 that is substantially complete before we release the audit report. So I think it would still fall under the substantially complete qualification that's now required under SAS 136. And I know we were doing that as a best practice before, so I don't think our process internally would change too much. But if you, as the plan sponsor, have an auditor that also prepares the Form 5500, I mean, you can certainly just ask them to ensure that that process is going smoothly. I think that was it.
Yep, we're at 1 o'clock.
All right, well, thank you,
Thanks,
everyone.
Anna and Sheri. I just had a couple last minute items. Thank you all for attending our webinar. We will be sending out the slide deck and resources in an email following this webinar. And if you complete the polling questions, certificates will be sent out within a few weeks. And please remember to take a moment to complete the online survey. Thank you, everyone. Hope you all have a great day.
All right, thank you. Take care.
Thank you, everyone. Take care.